Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the commodities space, still anticipating commodities are going to be a great place to be trading in the fall, and I've got my winter hat on because it's starting to get chilly. So that means start paying attention to these commodities. Certainly gold has had our attention for a few months at this point, but I'm anticipating oil and natural gas are going to join the fun as well. So looking at the dollar, we had a huge dump. Obviously a lot went on Friday, and as far as the bigger political world, check out the market rundown video that I did for more information on that. Just going to stick to the specific technicals here. And what I'm watching is the range from the high to the low recently on the dollar. We faded back up, rejected from resistance. So essentially what I am looking at in this range is our high of the move, the low of the pullback. Lower high has been set. And we're watching now 97.03 to see if the bulls can maintain a higher low compared to that level. And if they can, we'll look for this range to continue to tighten. If they cannot, that's a clear loss of the daily uptrend, which means zooming out to the weekly time frame that we're going to be looking back down towards 95.84. For a few months now, my most important time frame for the dollar has been the monthly chart because it's been in an uptrend ever since the dump in December. And that was actually the dump in December of 2017 into January 2018. So essentially we've been in an uptrend for almost 2 years, pretty much a year and 3/4. And I'm watching that because if that is lost, that is best case scenario for gold, which is already breaking out, but you better believe that's going to be some extra fuel for the gold bulls if we see this dollar bear break. So the dollar bears and gold bulls want to see a break of 95.84. That would lose the higher low pattern that's almost 2 years long, and that would be a good thing for the gold bulls overall. So 97.03, 96.67, and then 95.84. It's still a ways away. Certainly not going to head to that level anytime soon. But again, as we head through September into October, that's what the gold bulls want to see happen. And now anything on the daily time frame under 98.45, which is a double top, anything under that is just a daily lower high, even if we do see a bounce. So looking at gold. Gold got a bull break of our 12-hour equilibrium that we've been stalking for days and days. I thought it might take until next week, and I actually personally got lulled into a sense of complacency. I had a long work week this week with stocks and live streams and all that, and I said, I'm looking forward to a nice low-key Friday, work half the day, take off in the afternoon, stop looking at the screen. Of course, Trump and his tweets did not let me do that, but after seeing how the morning played out, we saw China say, this is what we're going to do to the U.S., adding extra tariffs. Didn't see the gold break on that. We saw we saw Powell speak. That didn't cause a break. So I said, all right, if those two things aren't going to cause a break, we're probably looking at early next week. And then, of course, Trump comes out and says, hey, we're going to retaliate later this afternoon. And then gold gets our break. So I was not ready for it. And hopefully some of you all nailed that move because it was a very easy minor play. So looking at the bull break of 15.08, and we saw a significant follow through all the way up to 15.30, so a $22 move, the clear bull break of the 12-hour time frame, keeping the daily uptrend in favor of the bulls, grinding the exponential support and heading back up towards the recent high of 1534.89. Bulls want to break that level, the sooner the better, just to eliminate any possibility of a double top. And at this point, as long as the bulls hold 1491, 1492, they keep full control on the daily time frame. So 1492 is now the most important daily support level, and 1535 is the most important daily resistance level. So congrats to the bull miners and the bull precious metal bulls. 1749 on silver, and we got up to 1746. So same thing, resistance is right there. Anything on silver above 1692 keeps the bulls in full control on the daily time frame. And again, just a very clear 12-hour equilibrium bull break. Looking at the comparison of the two, who's stronger, gold or silver? Still undecided. I would say that gold is slightly stronger. This move down on Friday is a lower wick, and that shows us that gold gained a little bit of ground against silver, but it's not meaningful. I have to see a clear break and follow through from this multiple week range in order for us to say, okay, clearly gold is stronger or clearly silver is stronger. But like I said, right now, gold has a little bit of a lean as stronger than silver, but not entirely convincing just yet. So here's the miners reaction, NUGT, and NUGT 4190 is key resistance. Anything above 3520 keeps the bulls in full control. And if we look at how it played out on Friday, again, you can see in the morning, not much going on at all until about 10:20, and then the bulls rocket shipped. New high of the day, 36.89 broke, and next thing you know, we're up almost 10%. So congrats to the bulls, very significant move to the upside, and pretty much just keeping the miners and the metals in control of the bulls at this point. And we'll see if that keeps up this week. Further S&P 500 weakness, if we see the break of the lows of the S&P 500 from August, that's going to be a good sign for the gold bulls as well. Checking in on oil. So oil had a bear break. It's a daily lower high and lower low. As we know, the weekly time frame is what I've been watching every day. And at this point, it's almost 11 months old. And we're watching for a clear break of 50.51 to indicate a bear break. The bears have favor right now. We have about a $3.30 move for a bear break. And for a bull break, we need about a $7 move. So twice as much bull action is needed for a bull break as opposed to a bear break. And if we compare it to the biotech sector, which I covered in the market video, it's been the same pattern. Correlation with oil and the biotech sector, they've been in the same equilibrium, and the biotech sector broke it bearish this week on the market dump here at the end of this past Friday. So that's notable. I don't think that oil is going to break bearish because the biotech sector broke bearish, but if market weakness continues, that's going to be bearish sentiment for oil as well, in my opinion. So we'll be watching 50.51 very closely. The bulls can definitely still stay alive within this pattern, but it's close to a bear break. And if we get this oil bear break, then DWT is one to be watching. And if oil gets the bear break, we're going to be looking for DWT to get up over $9, test 10.28. Keeping in mind that it's a leverage ETF, so there is time decay. So it's not going to be directly lined up with breaking resistance levels as oil is breaking support. What I mean is, if oil breaks the low of August, that doesn't necessarily mean DWT is going to be breaking the high of August, because that time decay is definitely a factor. So USO is the non-leveraged way to be keeping an eye on oil. And if USO were to break 10.49, that is a clear bear break. So keep an eye. Let's see if we get a bear break on oil sometime in the next few weeks. I had guessed that the break would come in September, and we're coming up on that month. Natural gas, still keeping an eye on it. So natural gas bulls have to break 227 to get my attention at this point. If they don't break 227, it's just keeping the bears in control of both the daily and weekly time frame, and I have no interest. If we break 227, I'm going to start paying attention. The weekly time frame is still watching these exponential resistances, which have been rejecting the price at this point for all of 2019. So if we can get over those levels and make our way back up towards 2050, that will be notable. Again, what would be the most ideal scenario for me, if I'm going to trade this natural gas move, would be to see a lower high form compared to 250 to pull back for a higher low on the weekly and then break resistance. I don't want to see a break of resistance straight from here, because on the weekly time frame, that's a move from 203 through 250, and by the time the break occurs, we've already moved, 45, no, not 45. We've already moved about 18% off of that low. So I'd ideally like to see it get a little bit tighter, and going to just be patiently watching. No rush to make any kind of trade on natural gas. If you want to be more aggressive and you're convinced that we're going to break this weekly pattern bullish, then you can be looking for an entry and place a stop off of $2 if you want to give that much wiggle room. But for me personally, I would rather wait until there's a clear shift in momentum and then hop on board the train. So that's what we've got as we head into the end of August. Bull miners and the precious metals on fire for the bulls. Oil is weak, but still has a good amount of space. I mean, if we have $3 of space, that's still 6%. We can drop 5% on oil this week and still be inside this weekly equilibrium. So bulls still have a little bit of space to work with, and patiently waiting on natural gas. So again, anybody that's, messaging me and saying, I've been trading the MJ space, it's been really brutal recently, I'm looking for something else to trade. My answer is, get familiar with commodities, because not only have the miners, the bull miners and precious metals been giving us great opportunity ever since the 2-year equilibrium we were watching broke, but I believe that oil and natural gas volatility is going to spike in the fall as well, and there's going to be trading opportunity there as well. So commodities are a great place to be keeping an eye on, learning, expanding to new markets, and allowing yourself to expand to new markets means jumping on opportunity when the odds are in your favor and not forcing trades in unfavorable situations. So thanks again. Have a good rest of your weekend, and we'll check in on Monday.